1. Set realistic expectations. As a newcomer, your goal should be to achieve small, steady profits instead of aiming for massive gains. Targeting $100 to $1,000 within 2 weeks relies on your initial investment, i.e., the amount you're starting with, the level of risk you're willing to accept on each trade, the leverage you are applying, if applicable. Example: for a small account, $200 to $500 target, seeking a 10-20% profit in 2 weeks. This translates to $20 to $100 for a $200 account. For a larger account, $1,000 to $2,000 goal, aiming for a 10-50% profit in 2 weeks, which equals $100 to $500. 2. The simple strategy. The 5200ths moving average, MA, crossover. The 5200ths of a mega ampere crossover strategy is notably one of the easiest and most effective for beginners. It employs 2 moving averages, MOS, to discern trend direction and entry points. This method is utilized for capturing trend following opportunities. Steps for the 5200ths moving average crossover strategy. Set up your chart. Utilize a 15-minute or 1-hour chart for easier navigation. Focus on short to medium-term trends. Apply the 50-period moving average, MA, and 200-period moving average, MA, to your chart. Identify the trend. A crossover where the 50 mA moves above the 200 mA indicates a buy signal, uptrend. Conversely, when the 50 mA drops below the 200 mA, it signals a sell opportunity, downtrend. Entry point. Buy when the 50 mA surpasses the 200 mA. Sell when the 50 mA falls below the 200 mA. Exit point. Take profit, TP. Aim for a risk-reward ratio of 1 to 2 or 1 to 3. For instance, with a 20 pip stop loss, set your take profit at 40 or 60 pips. Stop loss, SL. Position a tight stop loss beyond the entry point, about 20-30 pips away. This helps mitigate losses if the trade moves unfavorably. 3. Risk management for beginners. Effective risk management is crucial for survival in Forex, especially for novices. Risk 1-2% per trade. For example, with a $500 account, limit your risk to $5 to $10 per trade. This approach prevents one poor trade from depleting your account. Position sizing. Determine your position size based on your acceptable risk level. If you risk 1% per trade and your stop loss is set at 20 pips, calculate the position size accordingly. Example: with a $500 account and a $10 risk, your position size should be 0.05 lots, depending on your broker's pip value. Leverage. Avoid excessive leverage as a beginner. Opt for 110 to 150 leverage to maintain manageable risk while still allowing for decent profits. 4. Simple trade execution plan. Follow this straightforward trade execution plan. Identify the trend using the 5200ths of a mega ampere crossover, as described earlier. Wait for confirmation. Avoid entering right after the crossover. Validate the trend through additional factors like support and resistance levels. Candle patterns, like a bullish engulfing or pin bar in buy setups. Enter trade when the 50 mA crosses over the 200 mA, indicating a buy. The 50 mA drops below the 200 mA, indicating a sell. Set stop loss, 20-30 pips, and take profit, 40-60 pips, according to the trend. Monitor the trade. Refrain from micromanaging, but keep an eye on your trades. If the market favors your position, consider adjusting your stop loss to break even as it becomes profitable. Close the trade when take profit is achieved. If stop loss is triggered, or if market conditions shift, e.g., MA crossover in the opposite direction, exit the trade. 5. Utilizing Forex brokers with low spread. For beginners, selecting a broker offering low spreads is essential. This ensures that you avoid losing profits due to high costs. I personally use STMARKET, and the link is provided in the description box below. 6. Start with a demo account. Before investing real money, practice using a demo account. This allows you to become familiar with your strategy, refine your risk management skills, learn to interpret charts without the stress of actual capital at risk. 7. time commitment, you can implement this strategy within just 1-2 hours daily. Morning. Set up your chart and check for possible crossovers and trends. Midday. Monitor your current positions and scout for new opportunities. Evening. Finalize open trades or set stop-loss orders. 8. Trade during active market hours to enhance your chances of identifying strong trades. Consider trading during high liquidity periods. London session, 8 a.m. to 4 p.m. Greenwich Mean Time. New York session, 1 p.m. to 9 p.m. Greenwich Mean Time. These periods typically experience more volume, resulting in better price movements and decreased slippage. Example trade scenario. Market. Euro USD chart time frame. 1 hour chart, 50 MA crosses above 200 mA. Buy signal. Entry. 1.1500. Stop loss. 20 pips. 1.1480. Take profit. 40 pips. 1.1540. Risk. $10. 1% of a $500 account. Target. $20 profit if take profit is reached. Executing 5-10 trades over 2 weeks, with a 50% win rate and 2-to-1 risk, reward, may yield $100 to $200 profit. To reach $1,000, you'll need a larger capital or an elevated win rate. Conclusion. Here's a summary of the straightforward strategy for beginners. Employ the 52/100ths of a mega-ampere crossover method to identify trends. Risk 1-2% per trade while maintaining a 2-to-1 risk-reward ratio. Keep your trades uncomplicated, outlining clear entry points, stop losses, and take profits. Practice on a demo account prior to trading with real funds. Stay focused on active market hours and high liquidity pairs. Consistency and patience are vital for success in Forex. By adhering to this simple strategy and effectively managing risk, achieving $100 to $1,000 in 2 weeks is a feasible objective for beginners. I trade using STMARKET, a reliable broker fully compatible with MetaTrader 5. Join my Telegram channel to get exclusive trading signals, real-time market updates, and stay informed about basic and advanced Zoom lessons. Don't miss out. The link is in the description below.